Indian stock market is giving to the public. Thank you so much.
Thank you very much, sir. So good evening to everyone. First of all, I will convey my thanks to Chairman Sir Ravisankar Reddy to giving this good opportunity to present my views to all the members and students also here. And convey thanks to entire management committee members also, sir. Anyway, I don't want to speak much about. First, I will go to my presentation. First thing I want to know here, how many persons here are doing regularly trading activity or investing activity? Please raise your hand. I think that this is a closure group only. Okay, what I am thinking that this 1.5 hour discussion should be useful only. Okay, it is not like that. It is some kind of a presentation. Okay, like without much usage, I don't think it is not worthy. That's why I'm asking. Very few people only. How many people are here having Demat account? Okay, all are having Demat accounts. Right? Each profession, you see doctor or CA, engineer, musician, pilot, having they're having set of some qualifications, having set of some skills to do their profession. Suppose if doctor is doing some kind of surgery, definitely he should have some professional qualification as well as some professional experience, right? Without having that much experience, if he performs something, then definitely probably it may not be successful, right? So stock market also there is no exception. It requires some kind of skill as well as some kind of experience, proper experience. Generally, people think that if you do so many trades, we will become a perfect. It won't happen like that. We have to do correct practice, then only we will become a perfect. Without correct practice, we can't able to make any money in the stock market. So that is the reason we have to study properly. So what is the right approach to make money? That kind of approach only we have to study. Generally, if I interact with many my friends and all, they tell that okay, I have 10 years experience, 15 years experience in trading. Then I ask how much money you made. Then they say no, I lost so much money. Then what is the purpose of experience, right? So experience means it requires a correct practice, so correct approach. That's why I kept this slide. Okay, for a stock trader, what is required? Have you got my point right? First, we will discuss about types of companies. Types of companies in the sense, so not like Companies Act. Okay, in the stock market, what kind of companies are available for trading? In such companies, what kind of companies we need to choose for investment purpose? Okay, in NSE and BSE, almost put together 5,000 listed companies are there, right? Out of 5,000 companies, in our basket, how many companies we need to shortlist, at least for analysis purpose. We don't need to study for all 5,000 companies. That I will explain in the coming slides. So next one, fundamentals to be focused. So what kind of fundamentals need to be analyzed before purchasing any share? It is just a 5 to 10 minutes job only. If any share we want to buy, first is the technical is most important. If technicals are passed, then we will come to fundamentals. If technicals are not passed, we won't study any fundamentals. Fundamentals also I will explain. I mean, in shortcut I am telling that first we need to study technicals of the stock. If everything is passed in technicals, then we will see fundamentals. Otherwise, fundamental studies are not required for trading or even investment purpose also. There are 5,000 companies are there who can't study all the fundamentals, right? Because for every company, annual reports are there, and earnings releases are there, and like con calls are there. So we will practically go to all the fundamentals. So that also I will explain. So then we will see stock stages. After listing, how stock behaves. Then this is very most important, when to buy and when to sell. At what point of time we have to buy, at what point of time we have to sell. Maybe at what time we have to buy is maybe not much important, but everyone should know when to sell. That is very most important. Then risk management. This is also very most important. So I have mentioned that in BSE and NIC 5,000 companies are there. In 5,000 companies, we are interested only in these four category of companies. One is the leaders, next top competitors, then institutional favorites, turnaround stories. Suppose in any industry, suppose in chemicals different type of chemicals are there. Different type of chemicals in the sense of nitrates and fluorochemicals, then basic chemicals. Okay, then for organic chemicals, fine organic chemicals. So many type of chemicals are there. In each segment, one leader should be there. One leader is there. Who is that leader? We have to verify. So here, leader in the sense, they earnings point of view, EPS growth, they do year-on-year basis and quarter-on-quarter basis. Some improvement will be there. Earnings and as well as sales. So that is nothing but a leader only. So because see, leader means they can able to control the price, they can able to control the cost also. Then only they will make profits, right? If that company is not in the category of leader list, so we can't able to make more money in the stock markets. Because if you see past maybe 20 years or 30 years of the stock performances, mostly leaders are only made the money. If the company is not a leader, it's very difficult to deliver the good returns in stocks also. For example, Page Industries, Page Industries, Asian Paints, Bajaj Finance, HDFC Bank. So in every sector, every industry, definitely one or two companies are there. So leaders, not only market share point of view. Here our focus is whoever making good earnings in their balance sheet, in P&L, whoever making good sales, that can be considered as a leaders. So then top competitors means second position. Second position in the sense, suppose Asian Paints first, second one Berger Paints. Okay, every industry like that only. First to second to third, first to second to third. So if you want to check any company, first we have to categorize the positions, whether this company is a leader or a top competitor. Top competitor is the second place. Then institutional favorites. Then one more point here: leaders and top competitors are mostly mid cap and small cap names only. Mid cap and small cap. Probably it is around 20,000 crores market capitalization, less than 20,000 crores or less than 50,000 crores market capitalization. In case of institutional coverage, Amazon, Microsoft, Reliance, HDFC Bank, so many Nifty 50 or Nifty Next 50, all those companies are institutional coverage only. In case of institutional coverage, what will happen? Already it might be reached to very high level prices. Very big elephants. They can't able to grow their own revenue by 10%. They can't able to grow by earnings also 10%. Then what happens? Whenever a company is making good profits, then only share price also will increase. If company is not able to make good profits or good sales, share price also will not perform. Only exception is bull market. In bull market, what happens? Bull market don't care about earnings of the company. Bull markets don't care about sales of the company. I mean, there is no EPS growth, there is no sales growth. Still, company may make 200-300% gains. Company share. Suddenly, what will happen? Once bull market over, it will come down almost 80% to 70% minus. Suppose if share price is 100 rupees, it will come down to 30 rupees, 40 rupees. Once bull market over. See, 100 rupees to 30 rupees means how much percentage of fall? 70%, right? See, again, if that company, if that share to reach 100 rupees, how much percentage need to increase? Not 70%. Yes, exactly. So it minimum 200% gain required. So to cover up a loss of 70%, 30 plus one more 70 is required, right? Almost 230-250% of gain required to cover up our losses. In stock market, what will happen once share price is falling? To recover that share, it won't work straightforward calculation. It will not be much favorable also. So that is the reason. As of now, we are in bull market also. Bull market in the sense, so what bull market simply we can say, even there is no earnings, even there is no sales, all stocks are going up means bull market only. That is very simple definition. No earnings, no sales, but the share price is going up. Even if you see some companies in last 10 years also, they can't able to grow by CAGR of 5% or 6%. But share price might be rallied like 17, 18, 20% on CAGR basis. So that is very risky proposition. If anyone purchasing that kind of shares, if there is no growth of earnings and sales, we have to be very cautious. Generally, when price is going up, it goes slowly. Okay, when it comes down, just suppose we are reaching 4th floor by steps means it will take some time, right? By lift we want to come down means it takes 2 minutes or 2 seconds, 3 seconds like that. Share market also like that only. Fall is very fast. Even we can't able to guess also. Sometimes we may see generally many people after purchasing any security they see internet. Okay, confirmation bias. Whether any good news is there, whether any good news is about that company, like that they may see, but that kind of things it won't work out. Once bull market over, so most of the companies will come down by more than 50-60% also. So then turnaround stories. Turnaround stories means they won't get good earnings and good sales also, but maybe management change and maybe like new they are entering into new businesses like that. So maybe earnings we can't able to see in their balance sheet. So that will come under turnaround stories. If any share we want to buy, first we have to see whether the company is a leader or top competitor, then institutional coverage. General bear markets provide a good opportunity for to enter into the institutional coverage. Bear markets. Example, see in 2020, March month or April month. So mostly all Nifty 50, Nifty next 50 companies are fell by around 30% or 40%. Later it was recovered, right? Only bear markets provides good opportunity for institutional coverage. Institutional coverage in the sense of like DIs, FIs are holding are more than 30%, 40%, 50% in that company. So more than 1,000 institutions, 1,500 institutions like that they hold. In case of later top competitors, just they are new to the industry. They are coming to the market like listing of shares like that. Mostly mid cap, small cap companies. Then fundamentals should be focused. Earnings growth, sales growth, margin improvements. Margin improvements like net profit margins or gross profit margins. Then scope of expansion. So DMart is the example. DMart is having a very scope for enter into the all the mid-sized cities also. Just that is the example for scope of expansion, disruptive and ROE, corporate governance, etc. Okay, I don't want to explain much about this because everyone knows that, right? Then share price equal to earnings EPS into PE multiples, right? That is standard formula. Then what happens? Sometimes re-rating also will happen in PE multiples. In Dixon Technology 2017, earnings per share is 9 rupees. In 2023, what is the earnings? 60 rupees. That is 7 years absolute performance, 560%. In CAGR basis, 31%. So first 5-10 minutes will be boring only. Okay, later that definitely you will get interest. Okay. Then see share price what happened in 2017, 530. 2023, 6,800. What is the performance? CAGR basis, 44%. Even generally, what in the long term, basic rule is earnings growth should be equal to share price growth. If you want, you can check after completion of this session, whenever you have free time. Study past 20 years of their earnings, study past 20 years of their share price performance also. Probably it matches. Okay. So suppose some companies may not have good earnings. For them also, share performance also like that only. Sometimes see re-rating happens. PE in 1760, in 23 PE is 115. So that is the reason even though earnings are 31% growth, but share price has been delivered 44% returns, right? Yeah. So from this slide is very important. The stock goes through 4 key stages. Any stock, you can see there one more. Any stock will pass through 4 stages. First one is stage 1, then stage 2, stage 3, stage 4. So stage 1 means after listing the company into NSE or BSE, maybe some years, few years, it may not deliver any returns. That is, means even if you invest also, we won't get any return. Because of stage 2, what happens? Share price will start performing in stage 2 because their earnings are improving, their sales are improving, and stock performance also definitely increase. So that is the stage 2. In stage 3, top in the sense maybe earnings, sales growth may slow down or may decrease. Stock price also will not perform much. It will stay at the same place. Then stage 4. Stage 4 means automatically stock also will start falling. It will reach to very low level. Then lastly stage 4. This is 1, 2, 3, 4. This is a stage 4. This is a cycle. Most of the stocks fit into this criteria. So we are interested in only stage 2 stocks only. Any stock which we are interested means first we have to check whether stock is in stage 1 or stage 2 or stage 3 or stage 4. This is a basic check. Initially we have to do. If stock is in stage 2, then only we are interested. Otherwise, we are not interested to buy.
The company fundamental is strong and what based on the parameter what can given in the whole screen.
Yes, sir.
Why it will come in stage 4?
Yeah. So Asar is asking if fundamentals are good, earnings are good, and the sales are good. Okay, institutions also purchasing the shares. Then why it will come to stage 3 or stage 4? That will what happens. I tell you one example. In 2021 October month, Deepak United company almost in single day it was lost around 14-15%. After 2-3 quarters, results are excellent. After 22 first quarter, second quarter also good. Later, what happened? Their raw material cost has gone up. Okay, they can't able to maintain the proper pricing. The earnings also came down. So generally, market, even though market always see the future. Past not much interested in the equity markets. Generally, what happens? They discuss with the top management. Whatever management is available there. Many institutions they go to their offices. They will sit them and they will discuss and they will understand. So that is the reason. Before results come, automatically share also will factor everything. Did you get my point, sir? I will explain next slides also. Okay. If fundamentals are good, why stock is not going up? Definitely in future it may come down also. The 80% of the big winning stocks made the largest percentage stage 2 uptrend only. The stage analysis of the stock: stage 1, stage 2, stage 3, stage 4. In stage 1, loss of time, neglect phase, consolidation. Even if you enter, I will show you some examples also in trading view. Live charts, I kept some around 30-40 charts are there. Okay, I will show the charts also. Okay, how to identify stage 2. In stage 1, we don't get any returns, just we have to buy and we have to sit only. Maybe 5 years, 6 years, 7 years, we don't know how much time it will take. Only performance starts at stage 2 only. In stage 2, what happens? Many institutions are interested to buy and their company performance also might be increasing. So that is the reason in stage 2, advancing phase, accumulation, positive returns. In stage 3, topping phase, and distribution. Distribution in the sense many institutions sell and retailers buys. That is in stage 3. Then stage 4, loss of value, declining phase. Company may lose 70% of the value, 80% of the share value. That is the stage 4. Can I show you some examples for a better understanding? So this is a chart of REC Limited. In REC Limited, from 2010 to 2000 till 20 to 23, almost how many years are there? 13, 14 years, sir. Okay, it was not delivered anything in 12 to 13 years. So once here, if you see in 2023, so it has gone up from rupees 165 to around 500 rupees. So it can be considered as a stage 1 from 2010 to 2022 or 23. So from 23, this is in stage 2. So what we need to do, we have to identify the stocks when stage 1 is going to get completed. So when stage 2 is started, then only we have to initiate the buy. This is my monthly chart. Okay, I will put weekly chart. See here what happens in REC. Till here, okay. At this point of time, we don't know whether it is stage 3 or not, right? Because see, from high 510 rupees, now it is trading out 420 rupees. But at stage 3, very difficult to identify. Whenever the share price is declining, we can say on weekly basis, if I put moving averages, yeah. From here, July 23, till here, it never it was closed below 10 weeks moving average, except this week, right? If you study charts through moving averages also, it will give good indication that we can hold the stock or we can sell the stock. So basically, if any stock is trading below 10 weeks moving average, maybe exponential moving average or this is red line is 10 exponential moving average or simple moving average, it is very risky to hold the stock. So REC, what happened from here to here, never it was closed below 10 weeks moving average. Now it is very clear that it is going down. Where, sir? Here? Here? So it is never not closed below the 10 weeks moving average. If at all,
Which line is 10 moving?
red color, sir.
Okay.
Color 1 second. I will. Yeah.
The size of the candle depends on what is it when it shows.
Sorry?
The size of the candle.
Yeah.
Candle to like sometimes it is sometimes the width and the length. What does it mean?
Yeah, that also I explained, sir. Next slides I explain. Yeah. So this is BSE chart. The BSE also we can consider this is a stage 1, this is a stage 2. Right now we doesn't know whether it's stage 3 or not. That's why last 2-3 months market is not performing much. Many stocks are under stage 3 as of now. Many stocks. If bull market over, many stocks will come to stage 4 also. So this is the time we need to be very cautious. It is risky. Yeah, may probably it may enter. Probably it may enter here. You see, what happened? It is closed here below 10 weeks moving average. Later next week, it was gone up by 16%. So again, it closed to 10 weeks moving average. It is just indication only. That time we need to be very much cautious. Why we have to take risk?
What is the green line, blue line, red line, orange line?
Actually, this is for weekly purposes. It won't be much useful, sir. This is 20. This is 50. This is 200. If you see candles on that daily chart, in case of daily, we can use 50 days moving average. Even if you're trading below 50 days moving average, that also we have to be very cautious. The stock is in stage 1 or stage 2 to know the stage 1 or stage 2, weekly charts are good. This is IEX. So this is completely stage 2, then this is stage 3, then stage 4, again forming basing stage 1. We don't know whether when stage 2 will start. This is MCX. This is stage 1. Now this is in stage 2. The IPO stock, the Paytm. So for IPO also same concept will be applicable. So Paytm starts with directly stage 4 only. There is no stage 1, stage 2, stage 3. Directly stage 4. This is Power Finance Corporation.
We can just go back to stage 4. Again, it came back to other time. See the two candles. Immediate drop behind here.
Again drop it, sir.
Hold short in your opinion.
So it is not good to take a long position as of now. Because it is falling, right? We are interested in stage 2 stocks only. Then if we see Power Finance Corporation, this is stage 1, again stage 2. Sorry, sir. Sun Pharma. No problem, you can ask, okay. So this is stage 2 uptrend only. Yeah. If stock is in stage 2 uptrend, we should not hold. That is a basic rule.
Plan farmer.
Sorry,
Not
sir.
hold. Plan farmer. Not sell.
No, if stage is not in stage 2, we should not buy. Yeah, we should not hold. Sorry, sir.
Grandfather.
Land farmer. Okay. So this is stage 2, stage 3, stage 4. Then now it is trying to form a base. As of now, it is not in stage 2. Maybe it may take some time to form a base. Then it will go to stage 2. Okay, we'll go to presentation again. Okay, this is IRCTC. So IRCTC, this is a stage 1, then stage 2, stage 3, again very short period. I think 5 to 6 months, stage 4. Again, this is formed a base in stage 1, then started performing. South India Bank. It is an uptrend, sir. Stage 2 uptrend only. So you can go to presentation, right? Yeah. See how to identify stage 2 stocks. So this is most important. So first one is institutional footprints, huge volumes. Whenever stock is moving from stage 1 to stage 2, what happens? Institutional participation will increase. Suppose in stage 1, shares are, for example, any share trading volume is per day is 1 lakh. In stage 2, what happens? It may be 3 lakh or 4 lakh, 5 lakh like that. Volume also will increase in stage 2. So mostly institutions are purchasing that company. And the stock is trading about 200, 150, 50 DMA. So moving averages. In stage 1, what happens? Sometime 1 month, 50 days below, 1 month, 50 days above, 200 below, 200 above, like that happens in stage 1. In stage 2, not like that. Almost every day it is trading above 50, 150, 200 daily moving averages. And near 52-week high. Almost they make highs. They don't come below 30% or 40% from highs. Always they maintain high prices only. Then relative strength not less than 70. So relative strength means index performance versus stock performance. Suppose index is performed in last 2 months, 5%. Stock is performed 10% means it is better than 100%, right?
Correct.
Right? So yeah, percentage times it is better than 100. So definitely stage 2 stocks in terms of relatively with index performance also good only. So that also we have to check. That is also major checkpoint we need to be incorporated into our checklist. Relative strength.
So you told that
Yeah.
times that stock should not be 30-40% from their high.
Yes.
To identify, but in case of correction, like that definitely because of the high went up, it will definitely there will be set off our profit.
Yeah, it happens that time we should not enter. We should not enter. We have to wait till the completion of the correction only. Then what happens when correction is coming, we don't know. See, every correction starts with 5%, 10% pullback only. Okay, in the hindsight, we can tell that correction is 30% or 40%, 70%. So that is the reason if stock is trading below 50 days moving average, in case of daily charts, I mean a candle is on for a daily basis. In case of weekly candles, it should be trading above 10 weeks moving average. That is basic criteria we need to see. So relative strength, have you got my point? So relative strength means index performance versus stock performance. So when index is performed, stock is performed minus 2% returns. We should not touch at all. Stock is performed, index is performed 10%, their stock is performed 9%. That is also not good. We should be more than at least index performance. That is the relative strength. Number of institutional holding increase quarter on quarter. So we have to check institutional participation also, whether it is increasing or decreasing. Generally, this information available in MarketSmith India. I use MarketSmith India website. So they have very much data analytics. So there we can see quarter on quarter institutional participation is increasing or not. Suppose Asian Paints is there. In last quarter, 1,700 institutions are there. Example. This quarter only 1,500 institutions are holding this stock. Is it good sign? Is it not good sign, right? So that is also we have to see. Institutional participation is increasing or not. In this, every stock in stage 2 uptrend, institutional participation will increase. For how many quarters we doesn't know. Generally, what happens? Stage 2 it may last for 2 years, 3 years, 5 years, or 6 years also. We doesn't know. It may last for 1 year also. MarketSmith India. I will show you at the end of the session. My login I will show you. There we can see for every stock, quarter on quarter, institutional participation is increasing or not. Suppose if institutional participation is decreasing, means what is happening? Sell-off is happening. Some institutions are not liking this stock, right? In 2000 or 2005, in Amazon company, very few institutions are there. Now, maybe 20,000, 30,000 institutions are holding this stock. Generally, small cap, mid cap companies, 100 to 150, 200 institutions like that only. We can able to see. In case of Nifty 50, Nifty next 50 companies, around 1,000, 1,500 institutions are holding generally. So if you buy a good company at stage 2 starting stage, then after 2 to 3 years, institutional participation also may be increased. So that's when demand also increasing. That's when we get the returns also. So biggest winning stocks behaves like this, 99% above 200 days only. So 96% above 50 days. That means if you bought any stock, it give good returns only when stock is trading above 50 days moving average. Stock is trading above 200 days moving average. So after purchasing the stock is trading below 200 days or trading below 50 days means we won't get any good returns. So that is the very most important thing we need to check. Then earnings acceleration also we have to see. See if technicals are not good, suppose stock is not in stage 2 uptrend, still company is making wonderful profits. Then why institutions are not purchasing? See, please remember, institutions mean DIAs or FIAs. DIAs nothing but mutual fund companies, insurance companies, banks, pension fund authorities like that, all put together we call it DIA or FIA. See, fundamentals are good means, okay, institution usually buy, right? Institutions are purchasing the stock, what will happen? It will go up, right? So maybe for time being fundamentals are good, institutions are not expecting good performance in future. That is the reason they are not purchasing. We should not challenge the institutions because they are sitting full time, they are analyzing everything, they are analyzing industry, they are analyzing entire economy, they are analyzing entire annual reports, balance sheets, P&L, everything. Definitely they know better than us, right? If institutions are not by purchasing, if stock is not in stage 2 uptrend, how you can initiate buy? So that is the reason we should not buy any stock, even though fundamentals are good, if stock is not in stage 2 uptrend, right? I hope I am conveying correctly, right? Okay. See, then corrections are good. Even I like corrections because why? Once corrections are completed, then only good stocks will come out. Some companies, example, Laurus Labs, Deepak Nitrite, okay, Alkyl Amines, many good companies in 2021. In 22, 23, in this bull market also, it was not performed. See, after corrections are over, what happens? New industries will come. Example, this bull market, railways, okay, then infrastructure companies, pharma, public sector banks, public sector other undertakings, they are performing, right? These set of companies are not performed in 2020 bull market, 21 bull market. It was not performed. In this bull market, they are performing. So suppose if corrections comes, so after completion of correction also, maybe suppose next 3 months, if correction comes, okay, after completion of the correction, these companies, same companies will not perform. Again, new industries will come, new companies will come. So don't think that, okay, in 2021, that company was performed very good returns, sir. Okay, Balaji Amines, okay, some chemical sector performed like anything. This time, nothing. So in every market, in every bull market, new names will come. Old names will go out. So don't think that 2021 best company will become a 2023 best company. Even you analyze this 2023, 24, you analyze 2021. Those companies are different. Those industries are different. This time industry is different. Companies also different. So right, that's why corrections are good. Definitely, then we will be seeing new industries. Then we will try for new companies. This is non-negotiable criteria. Actually, this was developed by Mark Minervini. This is a very good one. So, any stock which we want to buy, the stock should be, the stock price should be greater than key moving averages. This is very basic checklist. 150, 200 days moving average, trending up for at least 1 month. See, why this is important? Sometimes, suddenly, suppose previous 1 year stock is trading below 50 days moving average, 200 days moving average. Suddenly, one day it will go up. Above the 200 days, above the 50 days. That is not good. At least 1 month or 2 months, it should trade above 50 or above 200. Many institutions, what happens? Generally, in case of stage 2 stocks, whenever stock is coming close to 50 days, they will initiate buy. That's why it won't come down again. It will touch 50 days again. It will go up. In stage 2 uptrend stocks, what happens? Institutions, they don't want to pay more money. They wait for good opportunity. Whenever stock is giving correction of 10% or 15%, then it will close to 50 days moving average. Again, they will initiate buy. That is called support. They initiate buy, it will go up. Again, suppose it is in a trade, the stock price and the 50 days moving average gap is very high. Again, they will wait. They wait for some correction. Again, it will come to 50 days moving average. Again, they will buy. So good stocks always trade above key moving averages. That's what most important. So never buy stock is trading below 50 days moving average. Never buy any stock which is trading below 200 days moving average. Be patient and wait for good opportunity. When stock is turning up to 50 or 200, then you may initiate buy. Don't think that it is a very good opportunity. It is coming very cheap. Future it will become very cheap. Generally, 50 days moving average is above 150 and above 200. Recent moving average will be always high compared to old moving average like 200 days PMA. And stock price at least 25% above 52 weeks low. So it is applicable only when bear markets. But this point is not much, but don't get confused more. And RSI is minimum 70, relative strength. So already I have mentioned about relative strength. See, relative strength is very powerful indicator. Very powerful. If you study some stocks, RSI is different. That is relative strength index. Relative strength index means speed of the stock. It won't compare with other stocks. It won't compare with other indices. Whereas relative strength means it is relative performance, stock versus index. At least it should be above 1. Minimum should be 70. Suppose the stock is performing 10%, index is performing 10%, stock minimum performance should be 10, right? Otherwise, it is a waste of time only. RSI should be strong uptrend. This tool is available only in MarketSmith India. Okay, that's why I kept this point. Otherwise, this point is not applicable. RS line. Yeah. So buy rules. See, simply I am telling. Very easy language. Okay. When we want to buy, there are two things. One is stock should come out from stage 1. That means it need to start stage 2 rally, right? In the stage 2 rally, where to participate? Suppose many stocks already stage 2 uptrend, right? Many stocks already in stage 2 uptrend. If you buy immediately, what will happen? That stage 2 might be over. Suppose today after screening all the stocks, we have identified 10 stocks in stage 2 uptrend because already it was rallied 300%. Today you bought some stocks. Maybe tomorrow it may start stage 3. Okay, after 3 months, stage 4. See, in stage 2 uptrend also, we need not participate all the times. We have to wait for good opportunity in stage 2 uptrend stocks. So here I am telling, so by rules, first one is not negotiable criteria. Non-negotiable criteria means nothing but stage 2 only. See, stock is trading above 50 days moving average, 200 days moving average, around 150 days moving average. Okay, institutions participation increasing means stock is already in stage 2 only. See, then tight contraction in prices, tight contraction in volumes, tight contraction in prices, tight contraction in volumes. So I will explain this. In stage 2 stocks, what happens? Every day it won't go up, right? Every day it won't go up. Suppose in last 3 months, okay, it was gone up by 20%, 30%. Again, it takes some break, some consolidation happens. In the consolidation, generally, what will happen? So price decreases or price stay at same place, right? Then what will happen? Some persons may book the profit, right? Some person book the profit. That time, institutions, so they won't sell. They buy from the retailers or they buy from the small institutions. So here, what we need to see, tight contraction in the price means we should not see any high volatility. We should not see any high volatility in the stock movement. Suppose today, as of now, in last 1 month happening, very high volatile. One day 5% up, next day 7% down, next day 5% up. That is high volatile. Okay, in stage 2, where we have to participate, once rally is going on, it will take some break. It will take some break. So we have to identify. So what is the price levels? Whether it is price is contracting or not. Suppose 0.5% up, okay, 1% minus, like that, and mostly 1%, 2%, not more than 3% price movements. And volume also very dry volumes. Very dry volumes in the sense of supply is not coming to the market. Nobody wants to sell. Very few people only wants to sell that stock. So when supply is over, what will happen? Again, institutions want that stock. Again, it will move. So actually, I have one tablet. I can write that. Okay, easily I can explain. I can draw. Is it okay? So give me 2 minutes, sir. Okay. Verify back, sir. I think it is there. Please, sir. I will draw and I will explain. That's better. Time is there, right?
Yes.
Okay. It won't work here, sir. Drivers also required. That is a very major thing. I will explain like this when a drivers required to install. Okay, it takes so much time in the system.
That stock price should be above daily moving average of
Yeah.
200, 150.
Yeah.
Is it cumulative condition or 200, 150?
Separate. 50 days is separate, 150 is separate, 200 is separate.
Okay.
Yeah.
So cumulative, all the 3 fights should be always.
Yeah, cumulative, yes, five, yeah, yes,
All
yeah,
three should
cumulative.
be satisfied.
All 3 should be satisfied. Yes. See, by rules, not negotiable criteria. So tight price and contraction, tight contraction volume. See, here what I'm trying to say that volume should be contracted in stage 2 uptrend, and price should be contracted once contraction is over, one price, there we have to try on single line. Okay, I will show you that also. So when price is going above that line, you can start to buy.
No, but sir, if there is no volume, it is a very high risk.
No, volume is, I will show you here, sir. So if there is no volume in the sense, see, stock is trading every day, maybe 5 lakhs volume in stage 2. Suddenly, for a few weeks, it is trading 80,000 volume, 90,000 volume only. That means very few supplies coming to the market. Price also not coming down. There we have to try one line on top of that prices. That is called a resistance, right? If price is going above the resistance line, we can purchase. That I will show you. So those supply to the market. No big sell off in previous 2 weeks. And current price should not be below 20 exponential moving average. See, in stage 2 stocks also every day it won't go up. It takes some break. That break we need to analyze properly. Once that break is over, we have to buy simply. What is in that break? Selling should not be high, and volatility should not be high.
What is EMA?
EMA is exponential moving average. Exponential moving average means the recent days it give more weightage compared to simple moving average. You can use daily moving average also. It won't get much difference also. EMA or BMA. Exponential moving average or daily moving average. Suppose you can keep this also. After purchasing share, if stock is trading below 20 EMA, straight away you can sell it. Okay. Or later, once it crosses 20 EMA, then if you want, you can buy. It is very risky. If stock is closer below 20 EMA, means it is like indication of a downtrend. Some people for long-term investment purpose, what they do, they keep 50 days moving average. If you have time, if you can able to watch daily markets, at least by closing hours, then at least you can keep 20 days exponential moving average as a sell condition. If you're trading below 28 days exponential moving average means or simple moving average, most of the cases it takes so much time to cover back again. So that is the reason I'm telling. Have you got my point? Yeah. See, so the indication that supply has stopped coming to the market. With this slide, maybe you may get a little clarity with this slide. See what TB means trapped buyers. So everyone listen carefully this slide. Okay, you'll understand much more better. So TB means trapped buyers. Someone bought around suppose 100 rupees. It came down to assume 65-70 rupees. There somebody will buy. They are bottom fishers. Again it may go to 100 rupees. Then what will happen? Again, why it is coming down? So what is the logic? Initially it was 100 rupees. It came down to 65. Again it went to 100. That is called resistance actually. Why it came down? See, I tell you, there are two things. Whoever bought at bottom level, they want to sell it. Supply is coming to the market. Then if there is that much demand, what will happen? It will come down. Then one more reason is there. See, trapped buyers. Someone bought 1 year back at 100 rupees. He is waiting for 100 rupees again. When it will come to 100, he is ready to sell. To break even, to get the break even. He don't want to sell at losses. He want to give the stock at least at cost price. So that is the reason whenever stock is reaching the previous highs, some supply will come to the market. So then again what happens? It was a fall down. Previously 100 to 65, now maybe 100 to 80 or 85 rupees. Then again some people are bought at these prices. Again, it reached to 100 rupees. Again, supply came to the market. Why supply came to the market? There are two reasons. In case of futures, three reasons. F&O stocks, right? Some people may know F&O stocks, right? See, here bottom fishers are ready to sell at profit. And trapped buyers also, they want to exit the stock at cost price. Then again, it came down. So finally, what is happening here? The volatility has been decreasing. Volatility is contracting, right? This is what VCP pattern, volatility contraction pattern. If you draw a single line here on top of all the highs, if you draw a single line here on top of all the highs, once price crosses that above line, it will move up. Why it will move up? Because everybody is in profit too. Everybody is in profit. All weekends are exited. Profit booking also over. Okay, whatever supply is coming to the market, institutions will buy. Because only few supply will come at this level. Then what institutions do? They pay more price. Then they pay more price. That's what breakout. See, in case of breakouts, if you see what happens, stock price go up by 8%, 10% like that. Suddenly one day. Have you observed that point, right? So what is the reason that? The reason is institutions are ready to pay more price. Because supply is very limited in the market. If you want good quantity of stock, institutions will pay more price. Then again supply slowly will come, institutions will pay, then it may go up 20%, 30% also. So that's why this indication, see this water is supply here, in second one only little water, third one dry completely. So after that moment only we have to initiate the buy. Supply should stop to the market. There we have to draw a single line on top of that. Once price reaches above that level, we can initiate the buy. Somebody do like Volta in the sense of huge selling come, huge volume. Institutions that selling with huge volume, stock is coming down, they buy. That we should not do, right? Is it clear this point? Generally, in stage 2 uptrends, we have to identify these kind of setups. In stage 2 uptrend, we have to identify these kind of setups in between. In stage 2 may last for 3 years, 4 years, 5 years, right? Every 3 months, every 4 months, this kind of patterns will come in stage 2. So why do breakouts occur? So what is the reason for breakouts? Breakout is one main reason is there is no supplies coming to the market. Everybody wants that stock. Okay, all weekends exited. Profit booking also over. So it is ready to take off. It is ready to take off. The reason is no one is ready to sell. No one is ready to sell. But fundamentals are good. Every institution wants that stock. Have you got my point? Then what will happen? Price will increase. So this is very most important. Okay, in every stage 2 uptrend stocks, in between these kind of patterns will come. These patterns we need to recognize and we have to initiate the buy. Generally, what I do every day, I scan around 1,300 stocks in TradingView every day. 1,000 crores market, above 1,000 crores market capitalization. After 5,000 companies, 1,000 crores above market capitalization is around 1,250, 1,300 stocks. Every week I update in my TradingView. It takes around 2 hours time. I sit at 8 p.m. till 10 p.m. I scan all the stocks manually. I don't use any shortcuts like scanners and all. Every stock I see. To see the 1,200 stocks, it takes 2 hours of time. So my eyes already trained. Okay, when I see that stock, I can able to tell that whether it is in stage 2 or not. First condition I see. Okay, if it is stage 2 uptrend already, then I see for this kind of characteristics, VCP, volatility, contraction, pattern. If suppose in stage 2 there is no gap, every day it is going up. We can't buy, right? Every day it is going up. It should take some break. In that break, volatility should be decreased in terms of both price as well as volume. If there is no volatility means, if there is no volatility contraction pattern, it is very risky. In last almost 1.5 months, I can't able to identify any good stocks. Previously, in the month of October, September, May, June, July, August, many good setups are there. Recent times, last 1.5-2 months, there is no proper setups. Highly volatile. In terms of volume is high. In terms of price movements also very high. That is very risky proposition. Did you get my point? See. So leave the name, whatever name, bull flag or bull pennant. Don't give much importance to name what we have mentioned over there. See the pattern. In stage 2 of trends, it gives, sometimes it gives 2 weeks break, 3 weeks break. Okay, that time it forms pattern like this. So we have to try it, just 2 simple lines. When price is moving above, pointer, yeah. See, in stage 2 of trend stocks, every stock it gives some break. Break in the sense consolidation. For it may be 3 weeks or 4 weeks, or it may be 2 months. Sometimes it may be 3 months. Depends on the market. In stage 2, it won't trade below 50 days moving average. It won't trade below 200 days moving average. But it trades above 50, above 200. The last maybe 3-4 months, the performance is maybe 100%, 200%. But last 15 days or 20 days, it is not moving anywhere. Okay, previously volumes are very high. Now volumes are decreased. Volumes are reduced. Price also not moving anywhere. Okay, 1% up, 0.5 down, 1% up, 0.5% down, like that only. So this is called a bull flag. We have to draw 2 lines here. Once price is moving above that line, we can initiate the purchase. This is called bull peanut.
Percentage for volume.
In trading view, sir. Yeah, that I will show you in trading view. Yeah. Sorry.
Okay, percentage for, you said price means 1% or 2%.
No, not like that. Maybe 2% or 2.5 like that. It should not be 8%, 10%.
For volume,
Volume, it should be below average volumes. Below 50 days average volume, so we can say. Suppose 50 days average volume is 1 lakh up to 5 lakhs. Okay, in consolidation period, volume should be
below 50 days.
below 5 lakhs. Okay. So not below 5 lakhs, sorry. Not below 50 days moving average. Volume and 1 crore volume also depends on the stock, right?
Yeah.
Volume we can't able to identify. At least it should be below 50 days average volume.
Example.
Yeah, okay, fine. So this is descending triangle. Okay, next one is flat base or consolidation. Flat base or consolidation. This is actually the probability of success is very high if you trade this kind of setups. Stock is an uptrend. It took some break for 15 days or 1 month or 2 months. It is consolidated very within a narrow ranges. Once it breaks in that range level, probably it will go up again. Sir, did you get my point, sir? Yeah, I will show you, sir. This is cup and handle. This is double bottom. How to draw a line, I will show you some more. Right. So this is one stock named ACE, Action Construction some Limited. This is monthly chart. I am going to weekly. Whether stock is stage 2 or not, stage 2 uptrend or not, right. The chart is based on daily candles. Chart is based on daily candles. So here in July 23, see huge volumes are there. Here, this area. So stock is going up. Here, what happened? So it came down. It came down here. So here, at this price level, the contraction has been reduced, right? This area. I will say one more example. See, if you see here, in January 3rd January 2024, from till February 1st, the price, the volume also contracted. At the same time, price also contracted. So above this line, what happened? Stock is going up. I will show one more example. I think this is not much clear. Which one, sir? Likita Infra. This I will, YFSS I will show you, sir. I think recently it is given a breakout. Then I will take Likita. See, this is stage 2 uptrend, right? See, here we turn here on single line consolidation. So, if you see here, these candles are very small candles. Volume also compared to this volume is very less. This volume is very less. So, from here, it has a probability to go up. Again, due to market corrections, again it is coming down. So, what sort of Likita? Yeah. So this is trading below 50 days moving average, 10 days, 20 days moving average, sir. I can't able to at least give it try to draw any line. If stock is an uptrend, at least we can give it try. See, I will remove this. Sorry, sir. One second. Okay, here the stock is in showing downtrend only. We doesn't know when it will start to move up. Sorry, sir. Which name? Newland Labs. Newland Labs. Yeah. So this is the line C. Have you seen that line? So almost 1, 2, 3, 4, 5, 6, 12 weeks, 3 months. Price was not moved anywhere, but stock is in already uptrend. Once this level is over, It has probability to move up. See how much this candle around 39% in a single week. Entire my presentation, I can say in two statements. First one is stock should be in stage 2 uptrend. There is no doubt. To confirm whether stock is in stage 2 or not, what we need to see? Stock should be above all key moving averages and institutional support should be there near to 52 week high. RS relative strength should be greater than 70, at least greater than 0. Index performance is suppose 20, stock should be 21. Here one indicator is that I will show you. Yeah.
Take Nova Agritech recently listed.
Yeah, I will take, sir. And second point is in stage 2 of trend, we have to check for VCP patterns, volatility, contraction patterns. Volume should be low compared to previous months or previous days, and the price also should not be very high volatile. Once this yeah. 12 weeks contraction completed. Generally, minimum 3 weeks is always better. Minimum 3 weeks. Yeah. Yes, I tried many times 2 weeks pattern 1 week, but most of the times it was failed only. So always we need to see for base at least 3 weeks. If better than 3 weeks is good. Yeah. There are more chances are there because supply is not coming to the market, but institutions want that stock. Yeah, one which stock you are?
No, not Digita. Nova Agritech.
Sir, Nova Agritech.
Nova recently listed.
Okay. Sir, what happens for a recently listed company? Sorry, sir. No, we have to wait. See, for IPO point of view, what I am trying to say, only for IPO gains you may apply. Only for IPO gains. Once stock is listed, first day, sell it. Okay. Then you wait to form a base. Example, Geo Finance. Okay. Recently, I traded this stock. Okay, Geo Finance. See, very beautiful pattern. This is VCP, right? Volatility contraction has been reduced in here. From 263 to around high, it is around 240, 250. So in case of IPO, okay. If you want to trade IPO stocks, we have to wait for a few months or at least few weeks. The base should be formed. We have to see whether it will start with stage 2 or stage 3 or stage 4. We have seen Paytm. It is stage 4 only, right? Some stocks start with stage 1. It takes some time to consolidate. It may take 2 months or 1 month or 3 months. We doesn't know. That's why we have to wait for some period to trade IPO stocks. So Geo Finance is here last almost 4 days. 1, 2, 3, 4. Yeah, it is down only. We will apply moving averages. See, as of now, it is not trading below 10 days moving average. It is not trading below 20 days moving average. It may go back also. It may go up also. As of now, we can't say anything. It is not in downtrend. It is not in uptrend. Simple, right? Probably, see, here from February 8 to February 20, when our stock is price is coming close to 10 days moving average, buying is coming, right? Buying is coming, again it is going up. This time we have to see whether buying will come or not. This one, sir, red line. Yeah. Suppose if somebody is holding the stock, okay, maybe after 2 or 3 days it is trading below 20 days also, then it is better to sell only. If at all, if you want to buy, again you have to wait for VCP pattern. Volatile contraction should be there.
The trading, what about long-term investing? If you do all this and like Geo Finance, if you selling 10 days moving average and 20 days moving average.
Yes, sir.
In a long term of 3 months, 6 months, again we will be sorry to say that we'll arrange suddenly it went up, but then again we will not be able to enter. We'll again see for the pattern to set up.
Yeah, in case of long-term investing, what we can do that we can apply weekly based charts. We have to put candles on weekly basis. On weekly basis, we can give 10-week moving average. If it is closing below 10-week moving average, we can sell it. So, example, we can say Adani stocks. Okay, Adani enterprises. Yeah. Okay, we can see sell rule here, how it works. I think I drawn many lines. I remove all those things. So this is weekly chart, sir. So what I said, if any stock is trading below 10 weeks moving average for long-term purpose. So where it is violated, tell me. In which?
Report. Not selling report.
So probably in December 22.
January 23.
December, sir. 19 December 22 on weekly basis. So big candle came. It was closed below 10 weeks moving average. This is weekly chart. That price is at that time it is around 3,700 rupees. Yeah. Again, you see that it was reached to around 1,200 also. Polycab. Yeah. See Polycab. This is weekly candle. If you put daily candle, it may give chance to exit. Here itself it is trading below 10 when October 23rd. For long-term purposes, we may keep weekly candles. We may keep 10 weeks moving average. That is safest approach.
Rain industries.
So industries, I think stage 1 is probably completed. Is it trying to reach stage 2? The reason is here. If you see volumes here, in stage 2 always it starts with heavy volumes. It starts with always heavy volumes. One second, sir. Because of market is not good now, that is the reason it is coming down again. It may form a base once again. If market is good, generally.
What is that line you have drawn to the orange line?
This one, sir. This one, sir. Yes, sir, I am drawing a line on top of all the all the prices.
But the current red candle has come in the last.
Yeah, again came, sir, here.
Yeah.
Actually, very good volumes are there previously. That's what I'm telling. Again, it may take some more time to form a base.
So take ranking and steel authority.
Saranki, see here, you can tell that, okay, at least I can know whether you understand or not. Someone. Okay. Whether it is in uptrend or downtrend? Downtrend, very good. This is stage 2.
Stage 3.
Exactly, this is stage 3. Okay. So if you see volumes also here, with heavy volumes, institutions are selling. Supply is more. Supply is more. So this is stage 3. So right now this is in downturn, sir. Not to initiate any buy. If at all, if somebody maintaining that share, they have to take a call. I should not tell anything.
What is that green line down there?
This one, sir. This is 50, sir. Actually, this is weekly we are seeing. Okay, I will keep put daily. So daily means 50 days broken on 50 February. Yeah. That time price was around something 770. Right now price is 580. That day itself we should come out from that share. Which trading below 50 days moving average.
Because it went up like 1,000 in a matter of 1 week. From 700 to 800 to 1,000.
Yes, sir. See here what happened on February 2nd. If you see volumes, with very huge volumes, with very high force, it is falling. Then somebody is decided to exit or slowly executed. General what happened? Institutions they don't sell in single day. They don't buy in single day. Maybe probably. Okay, right, sir. Then sale.
But then in that same share.
Yeah. Ramki. Yes.
See the right. First or second February. We are supposed to exit on that.
No, here. No.
February.
Yeah. At least 6th February.
But by the time the damage is that.
Damage happened. Now, if you sell now,
What happened?
you more damage. See, what I'm trying to say, if you have time, if you can able to see at least 10 to 15 minutes charts, whatever position you are holding. If stock is trading below 20 days moving average itself, you can sell it. Yeah, later if required, you can buy. See,
Suppose if I want 4th Feb, when it is at peak.
yes,
How
sir.
will I know what is the call I should take? Or because the moment after it is as sir told, after thinking the damage is already done, it's okay to restrict the damage. But the idea is to before the damage, how to exit.
Then we have to keep 20 days moving average, sir.
It is always about all charts. Suppose in the first week of February,
Yeah.
you see,
Yeah.
because there was no signs or no trend of that I should have any reason to sell. Because it was a stage 2.
Yes, exactly.
From 5th to 6th of February, we are able to analyze that it is on stage 3.
At least we should sell at least with this candle, sir. And February 2nd itself.
So where's the
This one February 2nd candle.
that day though huge.
Yeah, we can't avoid.
We will assuming there may be some bad news or market is overreacting. We generally in Monday selling, and I've been seeing the trend since almost a year, 2 years.
Yeah.
It is a clearly 400.
Sir, I will tell you one thing. See, Deepak Nitrate stock. Okay, that time I hold this stock also. Right now this is in consolidation. Yeah. See this candle, sir, October 18th. Okay, I remember very well. I exited this stock on October 18th. This week, closing. Because, see, the stock has moved from around 700 rupees to 3,000 rupees almost. Okay, with heavy volume, it was fall by around 16% in single week. So trading below 10 weeks moving average. Trading below 10 weeks moving average and with heavy volume. If someone is selling with heavy volume, trading below 10 weeks moving average, why should we hold the stock? If you see previously, from around 770 rupees, it was never traded below 10 weeks moving average. So we want to see for this kind of stocks only.
But after that, it has come again after the next after that.
Okay, no problem, sir. Let it come. See, first we have to protect our capital, we have to protect our gains. Later it is moved up also, no issue. We will go to another stock.
Yes.
Yeah, we can re-enter if required. If VCP pattern is there. Yeah. Generally, I track only, I keep only 2 points in mind. Okay, when I open my computer, only 2 points I keep in mind. First is stage 2, then I wait for VCP pattern to be formed. Only 2. Sir, sale. So this is stage 2, stage 3, again stage 4, stage 1 base completed. Is trying to come out from stage 1. Probably this is actually it should be stage 2 stock, sir, because the market is not supporting. Again, it's trying to come back.
But right now, the deadline or last
Right?
deadline.
Yes, sir. Once again, daily basis I will see, sir. On daily basis, it is trading close to 50-day moving average. Suppose the stock is maybe 2 or 3 days later, stock is trading below 50 days moving average. We have to take a sell call. Very simple.
Do we have any option to put like if it is below 50-day moving average, we can
Yes.
directly, I mean, the sell option will directly trigger like that? Do we have any
We
option?
can put in trading view. We have triggers also. In trading view, what can do na? See, we have alert system also in trading view. We can keep the alerts.
Gateway district.
Which one, sir?
Gateway district.
They take one consensus today only.
No problem, sir. Yeah, no. Tell me, sir. Gateway.
District pack. 70% is FI and AI, 35%, 40%, 95%.
Now they are holding or no, they are selling.
No, they are
Okay, actually holding fine, sir. Generally, what happens na? In every annual report of the company, they declare institutional holding, and every quarterly report also they declare. So quarterly report in the sense, now we are in the middle of February, end of the February, right? January, February, March sales. Not only company product sales, stock sales also we will come to know on in the month of April or May. Okay, so we only source the charts whether they are selling or not. Here gateway this thing. We apply moving average, sir. Moving average will show the way. Okay, where it's going. Sir, it's trading below 50 days moving average. Because markets also weak. See, I'm telling you, in last
The volume are very poor.
volumes are, see, if there is no buying force also, nobody wants to buy that stock also, with little supply also it will come down.
That is the case.
See, if you see, observe some days, January 20, September 12th, December 20, January 23, February 14, these 5-6 days, okay, what has happened? There is no buying force. Volumes are very little only. The share stocks are fell by 8%, 10%, 12%, 15% like that. See, maybe probably most of the stocks are in climax mode. Okay. From this level, it is very difficult to go up.
But the deadline, you see, the
Yes,
last
sir.
candidate is coming at S&P is coming.
See, sir, overall trend is going downtrend, sir. It is, let's say, little risky. So I'm not giving any advice, okay, to buy or sell. I'm expressing my views only.
Security technologies.
Which one, sir? Spelling?
CIG, FIT.
Should trading below 50 days moving average only. It is better to buy once it crosses above 50 days moving average. Really, you want to buy that stock.
This 50 days moving average, below 50 days moving average is there. How many days we have to track it?
So generally, one more point is, you 1 or 2 days for trading below 50 days moving average, fine. Okay. The 50 days moving average line is there, right? This line is showing downturn means it is very risky. Yeah.
So it is risky right now.
It is a little risky because it's a 50 days moving average line also. It is showing, it is trying to come down.
That is why, sir, like, there is no volume, it is coming down because of the external factor, market and other things. So there could be fundamental in the stock, like if I exit now, see,
Yeah.
as you said, if it is coming with huge selling pressure, definitely it's the right time to exit.
Yes, yes.
If you see the
Sir, sometimes what happen if in climax moves, okay, stock is moved 200, 300%, even with little supply, within little selling also, stock may fall more. Because after it was moved already 200, 300, 400%, everybody is holding the stock right now. Nobody wants to buy also. Nobody wants to, yeah, it was reached already high. Then with little supply also it may come down. If really you are interested, again it trading above 50 days, then you can initiate buy. You know, these all are probabilities only, okay. Sigachi very very good one, but I think I don't know. If you are holding, we can hold it, but it's not right to buy because it is not broken below 20 days moving average. If really are holding, you can keep it.
The red line is something below that.
Yes, sir.
Somebody
go down
buying
after
that. It may-
opportunity, na?
Sorry, sir.
It could be one of the buying opportunity.
Then it may reach to 50 days moving average also later.
But so the idea is to when you take call, whether it's when it is on a very good trend of stage 2
Yes, sir.
and every dip is a market.
Exactly, sir. It is in stage 2 uptrend only, but volatility contraction should be there. So volatility has been increased here.
Volume here.
So no, not only volume, sir. Volume plus price. See, volume should be low when compared to previous months, and price contraction also should be there. See, here there is no price contraction. So price is almost fell by 8%.
Yes.
Yeah.
15%.
Or maybe yeah. This is
Red line is heading down means it is right now to better to sell. Is that correct?
it is better to sell, sir. Yes, better to sell. If you want to initiate a buy, price contraction should be there, plus volume contraction should be there.
The size of the candle.
Yeah, size of the candle indicates what happens. Since morning to evening, only selling. Only one side move. General institutions, so they don't want to buy manually. They give triggers to the system. Their algorithms will buy. How they buy? Suppose today trading turnover of the Sigachi, assume how much volume, around 2.26 million. One institution may tell to broker that I don't want to buy 1% of the today trading volume. Okay, one more institution may tell that I don't want to buy 2% of trading volume, more than that. Sometimes what happens? See, in some days volume will be very low. Okay, initially, see 4,30,000, 1 lakh, only 4,40,000, sometimes 1 million like that. That time also institutions, so they don't want to buy all the volumes what are available. They buy 2%, 3%, 4% of available supply. If supply is not coming to the market, also what they do? They will wait. Whatever available supply is coming, on that supply they put some percentage, 4%. Suppose very big institution like LIC, they may buy 1% or 2% of trading turnover. E-Mudra. Spelling? Wandada, okay. That is upper circuit stock, okay. That is right? Wandada, yeah. So this is nicely stage 2 uptrend stock, but here little base is forming. Then it is better to avoid upper circuit stocks, because it is better to avoid upper circuit stocks, because one stock has given upper circuits, it has a chance to give lower circuits also. Yes, yeah. Risk management is very most important. Actually, we don't have time now. I put risk management slides also.
We have another session, sir.
Yeah, that's why I'm stopping here. And, yeah, and one more thing, it is before declaring a company result, we should not initiate any buys. If you're already holding that stock, you're already in some profit, you may hold the stock. You may keep the stock. Okay, before declaring company result and all, we should not buy any stock. Very high volatile.
But market will respond with good results.
Let it be, sir. In market, almost advanced mechanism, everything is factored before declaring a result itself. So can we close it, sir?
Yeah.
If you give only 1 minute time, I will show only this slide. Okay, these 2 slides I will show you. Okay, just give me 2 minutes. Yeah, sir, please see this slide. So one trader took around 20 trades. This is mind-blowing maths. For traders, this is mind-blowing maths. One trader took around 20 trades. One Segachi, one Tata Investments, like that, different companies. So capital is around 1 lakh. Finally, end up with 41,000. How much loss? 60%. So if you see profits, 15, 24, 16, 31, 21, 24. Good only, right? Definitely good profits. Last year, 18, 21, 19, 26, 17, 14, 12, 23. If there is no bull market, 90% of the traders position like this only. If there is no bull market, most of the traders profit and loss account look like this only. Okay. Same trader, same stocks. Same trader, same stocks, same market. He end up with gain of 30%. So what is difference between that previous slide and this slide? Stop loss. So he cut his losses at 8%. From
Combined slides are
combined. Okay. It will not come. Yeah. Okay. So most of same numbers only. Profit is same. Only the loss is different. Loss is 8%. He is cutting his loss at 8%. That is the reason he end up with profit of 30%. What I do is this type only. Generally, if I trade 100, probably 60 will get failed. Sometimes 65. Okay, I put the stop loss at 5%, 6%. If the stock is going 7% loss means I will not sleep because first I will sell that stock. I never slept with loss of 7 to 8%. Okay, I sell it. I don't mind, I sell it. That's why my batting average is just 35% or 37, 40% only success. Remaining trades are failed. But if I get some profit, I get 30% profit, 25% profit, like that. If I get loss, 6, 7, 8%. Risk reward should be, we have to verify. That's why every week I sit. Okay, in Jiroga trading journal, I download all my trades. Every trade I see in depth. Why I bought this? Why I sell this? Is it any mistake? If I done mistake, I will accept. Yeah, this is mistake of mine only. I am accepting and I will improve. That is very most important. Every day we have to accept many mistakes in trading. If we are not accepting our mistakes, means we have to repeat the same again. That's why post market analysis, post trading is very generally I do on Saturdays. Saturday morning I sit, I download all my last week trades and I see very minute level. I see why I bought, why I sell. So definitely then I prepare some notes. Based on that, next week I will try to perform much more better. That is continuous learning, right? Even I get 35 to 40% successful trades also, I make very good amount of money. Because my losses average since my trading maybe last 4 or 5 years losses average around 6 to 7% only. So gains averages are good. Around 14-15% average gains. Because I am not holding stock for long period. If a stock is trading below 20 days moving average, I sell it first. Then I see. We have to make the money, right? Okay, anyway, thank you. I am closing this session. Okay, I hope some knowledge you got it right. Thank you, sir. Thank you for giving this opportunity to present. Next section, you tell me, sir. In online, I am ready at any time. Yeah. Okay.
I request my management colleagues to please come on the stage. Please. No, we'll close. Please come, sir. Rasu sir, as rightly said by you initially, that first 5-10 minutes will be your boring session, and after that it will be a live session, which actually translated into true point. And in fact, we all had a very good learning. Am I right or no? Yes. So what we request you is now please add all of us in the group and start giving the tips to us. That is only the
In
request.
Telegram and group equity cast is there. Equity cast in Telegram equity. You write first QUEST. You can add. It is a group. Yeah, research it.
Please inform whenever, please inform that whenever that.
Yes, sir.
Please adding and then what is the BCP
Yes, sir. Research. Volatile contraction reference.
Thank you, sir, for your taking out your time and being here. And we request you, online will not work, sir. Only you have to be physically attended here. Probably Chairman sir will plan a next session, and we'll have one more session. And we'll start away straight away from the live sessions later. That's the best thing. So friends, anyone who would like to have any discussion for 1 or 2 minutes with sir, we'll close with this. We already had a very live session, so I think so that's not required. That is first thing. Thank you, Rasu sir, for being here, coming all the way from my hometown, that is Vijayawada. Thank you so much being here. I request Srinivas sir, Srinivas sir, please come. We have to respect our today's speaker. I request all the management colleagues also please join. It's a token of appreciation and gratitude for you, sir, for being here.
Introduction I used to say is my very good friend. I thought of seeing the feedback then only
Thank you, sir. Thank you, all of you. And would like to convey that we have a women's seminar on Saturday, which is coming up. And also we are going to have a bank audit seminar on 16th of March. I request all the women members who are there, please communicate to all your friends and please join the seminar, which is on Saturday. Thank you so much for being here. Thank you, sir.
Thank you.
Ramji Sharma.